Good evening, everybody. All right. I know we've got a bunch of new folks in here. So tonight we're already heading down our list of signals that we're doing. We're working on the kicker signals, and then we'll be doing the morning and evening star signals. No problem. So, anyways, so we're going to kind of do. I usually leave the kicker signal to the but the morning star signal and the kicker signals are both relevant. And the kicker signal is very simple. It basically indicates you have a downtrend. And then it opens here and closes here on this day. Then the next day they open it, meaning they've gapped it up at or above the previous day's open and go in the opposite direction. On the upside to the downside, uptrend, uptrend, uptrend. Last candle opens here, closes here. The next day they gap it down below the previous day's open and head in the opposite direction. Yeah, Charles, there's right above that is the you just contact Abraham. Plus, everything we do, these are just snippets of what we have as far as we got the 3 books on candlesticks. We've got all the we got plenty of training videos that so you don't have to worry about recording. That you've got the information that on your computer once you get it, and you don't have to worry about it anymore. So the fact that they gap tells you something very powerful, especially in candlestick analysis. Remember, gaps represent that enthusiasm from the point of the previous close to the next open, whether it's up or down. And it just illustrates when there's a very strong change of investor sentiment. I mean, very strong change of investor sentiment. So when I do my specific scans, usually I do because I know what I'm looking for now, which hopefully someday everybody will get to that point. But I do have one specific scan for candlesticks, and so if I'm doing my regular scans, which are trying to find, let's say if I'm trying to find bullish trades, I'm scanning for the stocks that had the biggest percent price move today. When I go through that, then I'll flip back to my kicker signal scan and go through those just to make sure I haven't missed anything. So the kicker signal has one relevant factor that is not addressed or not, let's say, not required like we have in the other candlestick signals. If we're seeing a bullish signal, the optimal place to see a bullish candlestick signal is when you see it in the oversold condition. Well, the candlestick signal for the kicker signal, it doesn't matter where you are in a trend. The stochastics are not relevant. Anytime you see a kicker signal, it's because there's been a dramatic change of investor sentiment from the previous day or the previous time frame to the new time frame. Now, when I say time frame, I'll use day as for terms in here. But remember, candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So they work just as well on a 1-minute chart, a 5-minute chart, 10-minute chart as they do on a daily, weekly, or monthly chart. Now, the difference is more than likely on a 5-minute chart or a 10-minute chart, any intraday chart, you're not going to see very many kicker signals because it's usually from the previous time frame that may have been the close of one business day to the next business day that there's a dramatic change of investor sentiment. Very rarely will you see it happen unless there's some sort of announcement during the day that kicks the trend in the opposite direction during the day. Okay, so whenever we see a kicker signal, a lot of times you want to see bullish confirmation. With a kicker signal, when they open it here, close it here, and gap it up and go the opposite direction, you've already got the indication that there's a dramatic change of investor sentiment. You can be buying at any time frame. So this gets people away, or gets the candlestick investor away from the prospect of, boy, I hate to buy a stock that's already up 5, 10, 15, 20, 40, 80%. You can be buying a kicker signal. I mean, that's the whole point of seeing a kicker signal. It doesn't matter whether this is up 10, 20, 30, 40%. It tells you there's going to be a lot more upside. Now, like any other candlestick signal, the bigger the signal, the more compelling the change of investor sentiment. And it doesn't, again, if you see something like this, the alert may not be that day unless you're in the chat room and somebody says, hey, look at Mattel, they announced earnings and they were gapping it up, and you go and you see that it's trading here or here or here or here. You know you can be buying it. Rick, there's going to be times when you don't know that there's been a major reversal. Let's say nobody mentions it in the chat room, or you don't see it. Yes, then you're looking for bullish confirmation the next day. Now, you don't have to have the same clarity of bullish confirmation the next day. I mean, it can waffle around here for a couple of days, but the fact that you had that kicker signal usually indicates there's been a dramatic change of investor sentiment, and you can be buying. Both candles should be large. Now, technically, if you have a wee little doji with a red candle and gaps up the next day, technically that is a kicker signal. But the relevant title to that is it's a best friend signal. So the kicker signal, usually you can indicate, or you can see a big bearish candle followed by a big bullish candle. The other element is you don't want to see a tail or a shadow on the downside. Now you can, but you don't want to see it. What you want to see is that they opened it and they immediately started trading positive. That's more relevant. And as I mentioned before, it doesn't matter where you are in the stochastics, but anything else that you can add as credibility to the dramatic change of investor sentiment, like you're at the bottom of a trend, or a kicker signal opened and closed above the T-line, that's all indication that this is a major change. Notice what happened the next day. Opened lower. If you'd bought on this day, it still wouldn't have been a crucial factor, because this signal right here told you the probability or the results were going to be a strong uptrend. So it's okay if it gaps up. It doesn't need to open at the same price of the previous. No, it should gap up at or above the previous day's open. The further it gaps up above the previous day's open, the more compelling the strength has come into the trend. John, if it opens up huge. I mean, a lot of times if, let's say this opened up here. Yeah, if it's a huge move, you're probably going to get some immediate profit taking. But then we know what to do with the message signal. We wait for the profit taking to be over and then start buying. So everything that you can add to your analysis of a kicker signal. For example, where do most people sell? They panic sell at the bottom. Look what happened here. Look at all the pieces of evidence. There's a reversal about ready to occur. They gapped it down in the oversold condition. That immediately tells you to start looking for a buy signal. No. The number, remember, the T-line Z is just a confirming indicator. The number one aspect of candlestick reversal signals is the reversal signal itself. Where it happens just adds credibility. So the fact that this one saw a day where they gapped it down in the oversold area, number one, that was your first inclination to start looking for a reversal signal. Number two, notice how far away you are from the T-line. So the next day when they gap it up above the previous day's open, where do you think the first likely target's going to be? Back up to the T-line. So just because you're below, now if this, I shouldn't say that. The further away you move from the T-line, remember, the more the probability is they're going to move it back up to the T-line, which makes this positive open, the indication of a potential kicker signal, that much more compelling. They're going to bring it back up. What would be the buy point on this one? As soon as I saw it trading, gapping up anywhere, I would just want to be a buyer. That's the whole different aspect where most candlestick signals, you want to seek bullish confirmation. The kicker signal is the confirmation. It's telling you there's been a drastic change of investor sentiment. So either candle of the kicker signal, they can have wicks, yes. You prefer not to have them have wicks, but this, for example, this one with the wick up here and then the wick just a small one here, you still had the confirmation that they opened it well above the previous day's open and went positive. The strongest kicker signal would be that they opened it and immediately started trading positive. And then again, notice where this one occurred. Look how far away you are from the T-line relative to where the T-line usually trades. Just that much more probability there's going to be a reversal. So anytime I see a kicker signal, like today, somebody pointed out AAXN in the chat room. I was buying this one today near the close because it was closing up near the top end of the trading range. Why? Because the probabilities of whatever reverse this, which in this case was very strong earnings, is that there's going to be more upside. Where would be the spot to tell me that the kicker signal isn't working like it should be? I wouldn't want to see it trade at all back below the open. Now, is that a big percentage move? It is. But the possibility of it trading back here, or I guess say the probabilities of it trading back here are very small, that the probabilities are that it's going to trade much higher. So, because we can use candlestick signals to confirm basically basically a pattern. Remember, all we're doing is taking the evidence of what investor sentiment is telling us, that the Japanese rice traders have told us occurs time after time, just improves our probabilities. If we can see this as a fry pan bottom, and we have a kicker signal at the breakout, what do we want when we see a fry pan bottom breakout? very strong buying. What do we know about the kicker signal? It's our strongest reversal signal. It could back down after gap up. Let's see. It could back down after gap up. Yes, it could, Jerry. But remember, we're looking at a pattern or a signal. Notice this did back off a little bit. But the evidence that there was something happening on this one was the fact that they gapped it up. It opened here, closed here. We knew we had a fry pan bottom. We knew that this is a breakout level, and the next day they gap it up above that level. Even though it backed off a little bit, if we saw this open and it was backing off, where do you think our buy point would be? Right back up here at the open. If they took this down and brought it back up through that level, that told us the buyers are still buying after they gapped it up, breaking out of this pattern. The gap is from where it opened and closed, so there's really no gap there as far as on a chart like we have it over here. It's actually something like this. This gap may not be filled for months, but notice what was confirming this pattern. Kicker signal on a breakout. You can see the fry pan bottom, and you can see how they opened it positive. Look at all the pieces of evidence that this was a fry pan bottom breakout. Number one, the kicker signal itself. Number two, notice even when they backed it off, they used the 50 as a support. Number three, look where the fry pan bottom started, right over here. They gapped it up through that level. What is this indicating? Most people would think, oh man, I'm not going to buy this. This has moved way too much. If you're looking at fry pan bottoms or candlestick patterns, that's exactly what you're looking for to confirm that pattern. Is there a way to get a recording of these sessions? Yes, Chester, these are recorded, and Jim will probably show you how to do it. What if it is against strong trend? What if it is against strong trend? What if it is against strong trend? RP, re-ask that question more clearly. Should we wait till the end of the day to know if the kicker formed a kicker signal? No. If it's here, remember, just the fact that they gapped up told us that they're probably trading this positive. If it trades anything positive, it's still a kicker signal. If it opened here and traded down here, what is that a kicker signal? No, that wasn't anything. The fact that they started trading this positive told you there's a pretty good kicker signal in place. Was CMG yesterday a kicker signal? Oh, not necessarily, because yesterday it had or 2 days ago, it had a small candle that was red. But then they gapped it up and traded up, but then it closed at where it opened, so it was a doji. So right now you're not seeing a kicker signal, you're seeing just kind of dojis going sideways. Let's see. Oh, JP, let me take a gander over here. Again, it's a good signal. I'm going to bring it over here real quick. It's a good, I would consider this a kicker signal. Not a huge, but the fact that they gapped it up, the fact that they gapped it up in itself is good. And notice your little island reversal here. Okay. All right. let's see. Technically it is a kicker signal. And AP, try to bring this over again. This is APEI. Yes, that is a kicker signal also. Whoops. Oh, man. Oh, come on. All right. Let me get back to the kicker signal. Hold on. Let me get through our kicker signal segment here. So again, this is confirming a fry pan bottom. Fry pan bottom. Opens here, closes here, gaps up. The probabilities were that you're going to be in a 45 degree. And notice what this was. Kind of a dark candle, kicker signal, breakout, and what was the additional information? The fact that they bounced right off the 50-day moving average. Oh boy, yeah, I'll have to pull up the live charts later. CYH, yes, is a bearish kicker signal today. I use slow stochastics, 1233. Remember, the stochastics are more to tell you whether you're buying a buy signal in the oversold area. Obviously, buying a buy signal in the overbought area doesn't mean very much, or looking at a sell signal in the oversold area doesn't mean very much. But in the case of a kicker signal, it doesn't matter where the stochastics are. The strength of the signal is so strong that it doesn't matter where you are. Now, it's more beneficial if you're down here. Tells you there's been a drastic change of investor sentiment. But, anytime. So if I didn't see this on this day, I'd be buying on positive trading, because what would this be telling me? I've got a kicker signal closing back up above the T line. Trading positive is confirming. So this one happened today. This will probably be on the recommended list. What type of pattern do we have setting up? A J-hook pattern. 1233 slow stochastics. So we have a kicker type signal right here. So what's that enhancing? That's enhancing our J-hook pattern. What's our implication with a kicker signal? There's going to be more upside. If there's more upside, what type of pattern do we have setting up? Again, the J-hook pattern. So during earning and candlestick gap is a kicker signal. So during earning and candlestick gap is a candlestick gap doesn't necessarily mean it's a kicker signal. A gap up from a doji is a best friend signal. Gap up from a bullish harami is just a gap up from a bullish harami. Oh, BSTI have earnings tomorrow before the market open? Okay. So that's implying that whoever knows what's going on. Remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So if they know the earnings are coming out tomorrow morning and they've gapped it up and buying, that means somebody that's probably a lot more educated or following that company a lot closer than we are is buying. Now, can the earnings fool you? Definitely. But through the last 45 years, I've discovered for every time you get fooled based upon what the charts are telling you right before earnings, that you've got 4 or 5 times where it's telling you exactly what's happening going into earnings. Okay, so the opposite is your bearish engulfing signal. Again, an uptrend, it opens here, closes here. The next day they gap it down at or below the previous day's open and goes south. Now, I remember these because as I was learning candlestick analysis, or even before candlesticks came, I guess when I was learning candlestick analysis, when I would see something gap down, my first inclination was, oh, please take it up one more time and let me out. Well, what I discovered is if you're in an uptrend and they gap it down below the previous day's open, there's only one thing you want to do, and that's close it out as fast as possible. That's not what it should be doing if you're in an uptrend. So anytime I see this, I close immediately. Why is that? Because what do most people do? And I put myself into the category of most people do. That if I don't close it right here, I'm thinking, oh man, maybe they'll take it back up. Then they take it down a little bit more, and I'm thinking, oh man, I should have closed it at the open. But I can't close it right now because what if I sell it and they take it back up again? Boy, would I look stupid. Then it's down here, and I'm thinking, shoot, I could have closed it here. I could have closed it here. And I know if I close out that position now, they're going to take it right back up. When do I finally close out this position if I didn't close it out here? Down here where I have to close it. Now, what does that happen to me based upon not doing what the signal tells me I should be doing? First of all, I'm sitting here all day long watching this position when all my other positions are probably not getting as much attention as they should. Secondly, if I close it right here and it starts trading lower, what's my thought process now? Instead of thinking, oh man, I should have closed it out, maybe I should close it out now, my thought process is, oh, there's gap this down and there's selling. I close it out. Now I should be going short because this is probably doing a bearish kicker signal. So it allows me to have much more clarity in my analysis of what I should be doing. The first thing I should be doing is closing out that position. Yes. First thing you should be doing is if you see a gap down below the previous day's open, close it out immediately. Did I just do that? Do I have this? Oops, nope, I must have skipped one. So anytime you see this happen, close it out. Now you're free to think about what it should be doing from there. So instead of sitting here thinking, oh man, I've got a loss, now you're thinking, oops, let's reverse this trade. Now you've made up, hopefully made up some profit, made up your loss as well as some profit. The first loss is your best loss. Okay. Leo, the first book I would buy out of the 3 books is High Profit Candlestick Patterns. That was the second book I wrote. Now, if you want to get some general review after that, then you buy the first book, High Profit Candlestick Patterns. That was published by Wiley & Son. But after you read the second book, the other big problem that most investors have, again, I put myself in that category, was if you have the best trading strategy in the world or best trading technique, but you can't get your emotions out of your trading, you're still going to be a lousy trader. So the third book was Candlestick Profits, Eliminating Emotions. That is how you use what you see in candlestick analysis to get your emotions out of your trading and become a much better a much better trader. Does the kicker have to open beyond the previous bar's open? Yes. You want to see it trade below. If this was your open and it closed up here, you want to see it opening below that level. Now, will there be times where you might have it open here and start trading down? Yeah, that's usually a time also to get out. It may not be as strong a kicker signal, but it's telling you the sellers are in control. Oh, Arjun, say what again? Oh, yes. Because candlestick analysis is the graphic depiction of human nature, yeah, the thing that kills most of us is our own emotions. So what we want to do is be able to analyze what human emotions normally do, and then instead of being the process of those signals, you want to be reacting to those signals, knowing exactly what you should be doing based upon what normal human emotions do. So if you understand that these are the graphic depictions of human emotions, you know that if they gap it down below the previous day's open, that's investor sentiment going the opposite direction. We don't now look at it on the basis of, man, what should I do? We can look at the chart and have it tell us exactly what to do so that you're countering or you're acting based upon what the chart is telling you versus what your emotions are hoping you should be doing. Dr. Emil, we did, I think, was it this past weekend? We did a full day training on about 9 trading strategies that work very effectively with candlestick analysis. Now, it wasn't so that you would teach everybody 9 trading strategies, so you had that in your bailiwick. It was that you could see that maybe out of 9 trading strategies, there was 2 or 3 that you could understand and really gain control of. And one of those strategies was trading the kicker signals. So the reason I was suggesting people find 2 or 3 to concentrate on is, instead of trying to be a jack of all trades, if you master 2 or 3, you're always going to have more trades than you'll ever be able to handle, number one. Number two, you know exactly what to do on each trade. So now, instead of you having to depend on somebody else's input, that you can analyze what's going on in a market trend yourself and become a kind of a expert at that trading strategy. It would be in and out, sounds like overtrade. What would be in and out, in and out? Let's see. Oh, there you go, John. Yes. Trade on what the chart tells you, not what you're feeling like. So, again, anytime I see this gap down and I was long, I know immediately to close out this position. Because, number one, the probabilities are extremely strong, like 99%, that if it's moving this way and they gap it down and start trading this way, they are very not likely to start bringing it right back up again. CB, yes. I think it's packaged where if you didn't make the session, you can still buy the package and watch it at your own leisure. Now, I say at your own leisure. If you're a member, the thing that you've got the great benefit is that you can look at it on your own time frame. But then if you have questions, you just come into the chat room during the day and say, on your trading strategy of kicker signals, what if this does this? You could always get clarification in here. Okay, let's see. We're still on bearish kicker. The bigger the gap, the more compelling there's going to be a strong downtrend. So anytime I see that kicker signal, we know we've got a high probability trade in progress. it is low from previous day or open. Open. Remember, the important factor of candlestick analysis is the Japanese rice traders illustrated where they opened it and where they closed it. Those are the most important decisions. So it's a gap down below the previous day's open, not necessarily the shadow. It's where it opens and closes. Oh, again, if you're closing something, options nerd, yeah, you're not buying back. You're going the opposite direction. So if I was long this for some reason and it gapped down, I close out my long and I go short, go the opposite direction. Can we reverse a position to make up for the loss, to cover rather than closing out the position? Can we reverse? Yeah, that's what the reverse position is. You're closing out the long position and you're immediately going short. So you're in an uptrend, you're getting toward the overbought area, and they gap it down below the previous day's open, close it out. That's not what it should be doing. Very, very rarely, unless it's an earnings report that the earnings were bad, but the prospects are for the future are good, that they'll open it here, trade it down, and then start trading it back up again. Let's see. All right, questions are coming. On PRAA chart, are the candles just below the bear kicker a bull kicker? Let's see. Did we PRAA? Are the candles just below the bear kicker a bull kicker? Just below the bear kicker. No, I don't see any bull kicker. I don't understand the question. Again, they're all still trading down. A bull kicker would have been here. The next day they closed here, gapped it up, and went the opposite direction. Yes, you have stop losses in the trade, and very simple. There's going to be points in a trade that tell you exactly where investor sentiment should not be trading. So if I was long on this one, say it's been a nice steady uptrend, and I'm getting to the overbought area, I automatically put my stop just below the previous day's open. Because logic very simply says if they're trading back below the open of the previous day in an uptrend, yeah, you're in the wrong direction, stop out. So because candlestick analysis is merely the common sense investor practices put into a graphic depiction, not practices, but perceptions, it's got common sense of where you should be out of a trade. The wicks don't count. It's the open and the close. No, the T-line, Leo, is the 8 exponential moving average. So on a chart, the 50-day moving average is the blue line. The red line is the 200-day simple moving average. Blue line is a 50-day simple moving average. And I'm not sure whether we change this. This might be the 20. Right now, I've switched the 20 to the 34 EMA. But the reason the 20, the 50, and the 200 are on our charts is not because we're using them to make decisions. The graphics, the candlesticks, show you what everybody else's decisions are. And every major money manager around the world has the 200, the 50, and the 20 on their charts to make decisions about their portfolio. The advantage we have as candlestick investors is we can see exactly what those decisions are at those levels. there's a possibility of a J-hook pattern. If it gaps down the next day, what's it tell us about our J-hook pattern? It's gone. You should be out of that trade immediately. So again, this is kind of watching right here at the 50-day moving average, whether they're going to support there or not. We can see kind of the rounding top, and then they gap it down. That tells us they weren't coming back up through the 50. We're in a downtrend. Yeah, if you hold on to your individual signals, we'll look at those, but only signals that are related to the kicker signal and the morning and evening star signals. Otherwise, it would go on for hours. Does this closing a position? No, Felix, it doesn't matter what time frame you're trading. If this is a 10-minute chart, now again, intraday you have very few gap downs, but no matter what type of time frame you're trading, usually it's going to happen on daily charts because obviously you've got the close of the previous day to the open of the next day. So there's that time factor in there. So that's why you very rarely see gaps on an intraday chart. Oh, CB, was this one of the charts we were looking at? Oh, yeah, if it's not, right now we're stuck on the PowerPoint, so we'll have to go to the live charts later. So anytime you see this, you close out, if you're long, you close out the long position immediately and get ready to go short. So we recommended ALB the other day to go short. Now, it didn't confirm yesterday. But if you remember in the, I think in the one of the comments or in the chat room, he said if it comes back down through the low of that candle, you start shorting it. Why? Because of the force of that kicker signal telling you you're in a downtrend and you can't get back up above the T-line. So again, there's the kicker signal. If you re-shorted right here, or shorted right here, obviously it was a good trade. I switched back to the 34 because I used to use that years ago. And then we had Doug Campbell, who is also trades candlestick analysis. He came on Thursday night quite a few weeks ago and pointed out again how effective the 34 was. So I switched it because the 34 usually is more effective than the 20. The 20 works well. The 20 works well if you have a big, consistent trend one way or the other. Usually it'll come back to the 20 instead of the 50. Is there a kicker on AABA 6 days ago? Okay, was that one of the ones we looked at here? And which one were you looking at before on PRRA? What was the question on PRRA? On the PRRA chart, just before the bearish kicker. Right here. A bull kicker? I can't tell. No, it doesn't look like a bull kicker. It looks like a doji sandwich. Which was a doji in between there. All right. Oh, Ernie, you can put your cursor on the chat room and you can make it you can drag it so it's smaller, and then up on the top in the gray line where it says show or start screen sharing, there is a box that looks like the arrows are pointing out. If you click on that, that will expand your charts to the full screen. We can stay all night to listen to you. No. That's I get bored quickly. In your experience, is there any indications to possibly predict a kicker? No, John. The kicker is the signal. So we're not trying to predict the signals. We're knowing what to do once we see the signal. When you have a big gap down, but on 1/2 the volume, what does that mean? Betsy, not much. Remember, we're not buying volume, we're buying price. So the gap down is still relevant based upon your stock price, no matter what the volume is. Okay, let me finish up, and then we'll go to the flutter kicker. Is the kicker signal that we're talking about here the 8 crossing the 20? No. The kicker signal is it opens here and closes here. Then it gaps down below the open. That is the signal. It doesn't matter where any other indicator is. Remember, the signal is the top priority for analyzing a change of investor sentiment. The other indicators we have on our charts are just confirming indicators. Do you stay in stocks over earnings if trendless, that is more or less flat going into earnings, or do you look for a kicker before? No. If we're going into earnings and there's nothing there to show us there's any reason to be in it, we don't know which way it's going. If the kicker occurs but is in the same direction of the trend, is that a kicker? Not necessarily unless it's a trend kicker. We'll get to that here in a minute. We've already gone through the bullish and bearish kicker signals, Ahmed. What if the kicker signal indicates strong bullish move, but the market is trending bearish? It doesn't matter what the market's doing. If there's a kicker signal in an individual stock, that means that individual stock's getting some tremendous buying. Is the kicker signal in an uptrend is not as significant as a kicker in a downtrend? No, a bullish kicker signal is the change of that downtrend, whereas a bearish kicker signal is the change of that uptrend. They're both as significant as each other. It's the drastic change of investor sentiment. Okay, so if we know what a kicker signal is, here's a flutter kicker signal. A flutter kicker signal is where you see it gap up above the previous day's open, but it does a doji. And if you remember from our first training a few weeks back on the doji, there's a very simple doji rule. The price is usually going to move in the direction of how they open it after a doji. So if that's the case, if it opens positive after this doji, which way is this candle likely to move? In a positive direction. So we can be buying immediately here because what is this setting up? What we call the bullish flutter kicker. But it's probably going to trade positive. And why is this a flutter kicker signal? Because if you took this little flutter out of here, you basically have a kicker signal. Betsy, again, everybody that has a example of what you might think is a kicker signal, just hang on. As soon as we get done, we still got the we're not anywhere near done, and you're already close to an hour. You're going to be late tonight. So anytime I see the gap up, that tells me there's a strong change of investor sentiment. Big indecisive day, you're buying on the bullish confirmation. This is what we call a message. It's an indecisive day, but notice where it closed after it opened. Dark candle. What do we want to see the next day? Bullish confirmation. And what's the message? Is that there's a powerful change of investor sentiment, becomes kind of a flutter kicker signal. Gap up above the previous day's open. Yes, the kicker signal is more, a lot of people ask which one of the signals are the strongest. Well, we've already taken the 50 or 60 signals and narrowed them down to the 12 major signals. The reason we have the 12 major signals is two aspects. One, the signals are very powerful in the sense that they will probably produce a strong reversal, number one, and a high probability of a reversal. But more importantly, the 12 major signals occur 99.99% of the time. The other signals you very rarely see, so I tell people don't spend your mental time and energy trying to learn those other signals. If you just learn the 12 major signals, what they look like, and what the Japanese rice traders described as the investor sentiment that created those signals, you've got as powerful a grasp of knowing what prices are going to do as somebody that maybe have traded in the market for 50 years. Yes, a flutter kicker signal usually has a gap up and a doji. Then it opens positive the next day. So the flutter is that indecisive trading day. So the kicker signal, when everybody asks which is the most powerful of the 12 major signals, they're all powerful. But if I was going to pick out one that's more powerful than the rest, it's the kicker signal. And that's why when we did our trading strategies, it can be a trading strategy in its own right, that if all you did was trade kicker signals, you're going to be way, way ahead. So again, there's a gap up, an apple, followed by bullish trading, kind of your bullish flutter kicker signal. The fact that they opened it above the previous day's open and started going this way tells you your flutter kicker signal is in effect. Not quite a kicker signal, but enough to say you had a dark candle, gap up, and another gap up. Very strong change of investor sentiment. The bigger this candle is, the more compelling that there's been a drastic change of investor sentiment. Have you seen kicker signals fail? Yes, they will fail, but not, let's see, how do I say it? The probabilities of them failing is so small, or is the percentages are so small that you trade all candlestick kicker signals, and then then there'll be ways to tell that it's failed, like where it comes back and closes below, eventually below the open of the green candle that started the uptrend. In an uptrend, and there's not a candlestick sell signal, would you exit on a close below the T line? Yes, provided that the market is probably turning over, and even though it's not a candlestick sell signal, it closes well below the T line, you close it out. Now, what's the worst case scenario? The next day they open it up and start trading it back positive end, you can buy it back because you haven't had a reversal signal. And if they're trading back up above the T line, remember our simple analysis of the T line. As long as you stay above the T line, you're still in an uptrend. So this one was today, EVH. Notice what it did. It opened up here after closing here. So what's this tell us about trading tomorrow? If this opens positive tomorrow, we're buying immediately because we've got a bullish flutter kicker coming out of a fry pan bottom. Yeah, the books are on the website. How often do we get a kicker signal? Not very often, but on any given day, especially with the volatility of this market, there might be times where you go through 3, 4, 5 days and not find a kicker signal. But I bet you died to know that if you did a scan today for kicker signals, you'd probably come up with 10 or 15. If a call is purchased, how far out do you purchase, and how close at the money do you purchase? Don, that's up to each individual. If I've got 3 weeks between now and expiration on the March contracts, yeah, I'll probably just buy the calls outright. But I buy the closest ones because what's this telling us right now? It's telling us exactly what's going on in investor sentiment right now. Okay, I think I've got most of them. Okay, now we've got the trend kicker. Somebody was asking, if you see a kicker signal during the uptrend, you buy it. Yes, that's called a trend kicker signal. So you can see we're in an uptrend, then they have a selling day, the next day they gap it up and take it up. That's a pretty good confirmation the bullish strength is still there. Uptrend, uptrend, uptrend. They sell it off. The next day they gap it up. That tells you there's probably more buying coming into that trend. Big breakout. They open it up here, close it here. The next day they gap it up again. You want to be a buyer immediately. Because not only in this case was it telling you had a trend kicker, telling you there's more upside, but look where they opened it. Above this little downtrending channel, telling you there's a new dynamic in that price move. So candlestick analysis is nothing more than identifying where the bullish strength is coming in. Notice our little kicker signal. Notice our uptrend. And what's the analysis that the Japanese rice traders always tell us? Where do most people buy? They buy exuberantly at the top. So if you see that gap up in the overbought condition, what do you start looking for? Sell signals. So this isn't rocket science. This is utilizing the patterns and signals that the Japanese rice traders have illustrated to us for hundreds of years. If you always keep in the back of your mind, or you put it up on your little tab on your screen, that basically says that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's what candlestick analysis is. This is a graphic depiction of investor sentiment. Now, the most powerful aspect of candlestick analysis is the T-line as an indicator. Notice our fry pan bottom. You can see the moving averages that we use. The 200, the 50. I'm betting this one's the 34 now. So if you take the explanation of candlestick analysis, or candlesticks, which is the graphic depiction of human emotions, and you take the T-line, now you know that the 200 and the 50 and the 20 are on everybody's charts, making their decisions. So they act like magnets because everybody's waiting to see what happens at those levels. But the T-line, nobody has that on their chart. Now, when it works so effectively with candlestick or any price movement, basically what it's telling you, it's like a Fibonacci number. It's a natural support and resistance level of human emotion. So if you've got the candlestick signals, which are the graphic depiction of investor sentiment, and the T-line, which is the support and resistance level, natural support and resistance level of human emotion, you've got an extremely powerful combination of telling you when a trend is moving in the right direction and when it's ending. Should be confirmation. All right, let's see. How do you distinguish from a trend kicker to an exuberant top? You give more, in this case, you can see the fry pan bottom. Now, if you've been long this one because of the fry pan bottom, yeah, but what's our simple rule of a fry pan bottom? You stay long until you see a sell signal and a close below the T line. Are you ignoring the red between on each? Are you ignoring the red between on ECTY? I mean, ignoring that? No. But what is that signal right there? All right, so the question again, what is that signal right there? Anybody? Class? Class? Well, as far as a signal, it's not a signal, right? But the fact that they opened it here and started trading positive, now it's a signal. It's not a dark cloud because it didn't close more than halfway down this candle. So what's our simple rules that wouldn't have had us coming out of this if we were long? Because we're in the fry pan bottom and it hasn't closed below the T line. The fact that they gapped it up told us now we have a trend kicker. There's probably more upside. Morning star? No morning star. There you go. J.K. said it right. All that is a down day and an uptrend. Oh, it doesn't matter what, if it's GW, if right now all we're looking at is what is the investor sentiment telling us right now. If I'm going to own this stock based on a swing trade, meaning 2 to 10 trading days, I don't really take a look what's going on way back when. That's what we're looking for. And this is why a lot of people ask, well, do you buy options based upon the Greeks, your delta, your gamma? No, because your delta, gamma, or whatever is not going to be very exciting based upon this. But as a candlestick signal or pattern, this is our expectation coming out of this, which has absolutely nothing to do with the delta created here. So, again, the kicker signals are your most powerful signals of all. Again, you could use that if it was, if you want to just trade 1 or 2 strategies, 3 strategies, you use the kicker signal as one of those strategies and become very adept at it, and you'll make tons of money. Bill, yes, anytime you see a fry pan bottom, as long as you're above the T line, that fry pan bottom is still in effect. What are the signs if kicker is failing? Oh boy, let me go back up here real quick. Find. Let's say, for example, if this is my kicker signal, and I expect more upside, if it closed back below right here, that would tell me my kicker signal is not working very well. I'd close it back out. Now, how often will that happen? Probably less than 10% of the time. So, again, it's the probabilities that you're going to be in a very strong uptrend. Let's see. All right, so that's the kicker signal. We should have just done the kicker signal tonight because now we got the can everybody hang on for another 30 minutes at best on the morning and evening star signals? All right. Okay. The reason the morning star signal is so appealing or so relevant is you're in a downtrend, you have an indecisive trading day, then the third day closes more than halfway up this candle. Oh yeah, I'm drinking my monster drink that Sandy doesn't let me drink. So we'll keep going. So the morning star signal should occur when you're in the oversold area. You see a doji, and then it closes more than halfway up this candle. Now there's aspects to make this signal more powerful. If they gap it up on the third day, that's that much more compelling that they've changed the direction. Now again, look at all the elements. This is where I learned how to do candlestick analysis. Is if I went back through the charts, I'd say, all right, what happened here to make this a reversal? What happened here to make this a reversal? What happened up here to tell us the downtrend started? So that's when I started noticing that out of the 50 or 60 signals, there's only about 12 signals that really were relevant. So here's our morning star signal. What was our alert to start watching for a morning star signal? Well, we had a doji in the oversold area. If it opened positive the next day, what's our simple doji rule? It's probably going to trade positive. In this case, if it opens positive and trades positive, where do you think your first target's going to be? Probably at least to the T-line. So what's the worst case scenario? The next day they open it and close it below the halfway point. Somebody was asking, do you have stops? Or when can you tell when a signal's failed? Well, if this is my signal, and this is the candle that told me the bulls were in control, and if it opened here the next day and closed more than halfway down this candle, who's in control? Logically, the sellers are, so you close out the position. For 40 some odd years, I've listened to all these professional money managers tell you to cut your losses short and let your profits run. The only problem is that they never tell you how to cut your losses short and let your profits run. We'll do a stop loss again Wednesday night here soon, showing you the simplicity of the logic of stop losses with candlestick analysis. So if we know that we want to be buying doji in the oversold area, gap up the next day, closing, again, the further they close above the halfway point of this candle, the more compelling you can see the bulls are taking control. Then what do you want to see? You want to see it stay up above the T-line. So anytime I can put all those factors into my analysis, big bearish candle, in this case we have an inverted hammer. Did we do the inverted hammers yet? Remember, the inverted hammer, even though it's probably the least frequent of the 12 major signals, if it opens positive the next day, the probabilities of an uptrend occurring after a positive open after an inverted hammer is probably 95% or greater that you're going to be on an upside. Color of doji. A color of doji does not matter, correct. Remember, a doji just has a small body. It's the fact that you're witnessing an indecisive trading day, whether it's a spinning top, an inverted hammer, a hammer, anything that tells you there's indecision between the bulls and the bears, and then the next day they start trading it positive. It tells you, again, there's your morning star signal. Big down day, day of indecision. Third day closes more than halfway up this candle. So what confirms our morning star signal? If it opens positive, it's confirming our morning star signal. If it opens positive, what's it telling us about the T-line? The T-line's not acting as a resistance. You want to be a buyer. So the wick gives you the direction the following day as in pointing up. So the wick gives you the direction. No, the wick. So the wick gives you the direction of the following. Now the wick is merely showing you that the wicks is in the doji is just telling you there's indecision that day. So if we've got, remember what our best friend signal is. It's a doji followed by a gap up, especially if it's in the oversold area. Then if we can add to that it's a Morningstar signal that closes more than halfway up, it's telling us our probabilities are we're in an uptrend. So if we're looking at kind of a Morningstar signal right here that closes above the T line, starts your uptrend. Now we have a J-hook pattern potential, and what turns the J-hook pattern around? There's our Morningstar signal, followed by a close above the T line. Okay. What is the percentage of body to wicks determining it the doji? Just the fact that it shows indecision. As long as you can see there's indecision between the bulls and the bears. So even if you have a little bit of a body, like a spinning top, that's still showing there's indecision. So visually, you can see there's indecision right here. And then visually also, notice where this Morningstar signal is occurring. Again, your stochastics in the oversold area, a Morningstar signal, smack dab on the 50. Now, why is that relevant as far as candlestick analysis? Because if you're a major institution and you'd like this stock and you've gotten approval to buy 1.2 million shares for the fund and it's drifting, where do you think you're going to wait to buy? You're probably going to wait to buy to see if it supports at the 50. As it starts showing some support there and you start buying, that becomes our indication that's where everybody's starting to step in. Don't get hung up with textbook perfect signals. Yep. Just the nature of the signal. Down day, a day of indecision, the third day comes up. So the fact that you can add another parameter like support off the 50 just increases the probabilities. I don't know whether we should have done it. I'm going to put in this special. Well, Becky, are you there? You want to type in what that special is? That's utilizing a lot of this information. Betsy, I do the same thing. There are times, because I'm not watching closely and I'm day or intraday trading, especially on commodities, and I look at a trade and I said, oh man, I should have closed this out, and look where it is. It's way down here. I need to close it out. Well, I know immediately when I say to myself, I need to close this out, I need to wait a few minutes to see whether I'm not at the point where that's where everybody decides they want to be closing out, me being like everybody else. And I would say probably 90% of the time that's the bottom and it starts heading back up. So anytime I'm in a situation like right here, I'm thinking, oh man, I should have closed this out. I shouldn't be long. My first thing is to say, all right, where should I have closed this out? Oh man, right about in here after the sell signal. That's how I taught myself to do what the chart tells me versus what I think I should be doing. Neil, yes, again, it's just showing you indecision. So it doesn't matter how big or small. If the body is relatively big, then it's not an indecisive day. All right, so if we see something like this, we're in the oversold area, we see a huge, this was on the Dow a while back, we see a huge doji hammer type signal. What's our game plan? Game plan is very simple. Just start scanning for long positions. Because if this is the Dow, and they open up positive the next day, what type of signal are we getting? Well, first of all, we're getting that doji confirmation of bullish signal. Second, it's happening right here on the 200-day moving average in the oversold area. So when we're buying right here, everybody else's programs are kicking in up here. So this is why, knowing what the signals look like, you can kind of anticipate that if you're seeing a doji right on a smack dab on a support level, if they open a positive, you can be buying immediately. You don't have to be waiting around. Now, buying immediately does two things for you. One, it's a high probability trade setup that you're going to have a reversal signal, which puts you in early. And second, if it fails, where would the failure be? Well, if it came back down and closed, let's say back below the 200, you're right back out of the trade. So what's that put us into a situation? Puts us into where we're buying, where our probabilities are that we got a big move to the upside, and we're closing right back out when that doesn't work. Yes, part of that confirmation is if we see a Morningstar signal and it closes right on the T-line, in this case it closed above, but the next day they open it and start trading above the T-line, you can be buying. KP, we have a chat room open every day. We usually have about anywhere from 130 to 160 people in there. The benefit of the chat room is twofold. One, we've got a lot of traders in there that know how to find the good trade setups. So not that you just jump into one of their trade setups, you can look at the chart and see why they're doing it. And it's another place where you can ask questions to say, all right, why is XYZ a good buy? Somebody's going to come in and say, hey, look at the signal and look at the T-line, kind of make you learn a lot faster why a good trade is a good trade. We will have a webinar. I can do a webinar on the moving averages. So I also put out 2 or 3 stock picks every day. And we do it in a video format in the members area. And it's so that you don't necessarily have stock picks. It's so that you can learn from that video why those picks are being recommended. So we just make it very simple. You say if XYZ opens positive tomorrow, you want to be buying, and then you don't want to see it close back below such and such level. So again, we put out the stock picks, not so that you have stock picks, but you're learning why you have stock picks, which allows me to tell you that if you're just doing what somebody tells you without understanding why, then you don't really get anything out of it. And I kind of illustrate that by the cop that's standing on the street corner, and this drunk comes weaving down the street in his car. Cop blows his whistle, pulls the guy over, walks up to the car and looks in the back seat, and there's a penguin sitting there. He goes, what the heck are you doing with a penguin in your back seat? And the drunk said, oh, I found him out on the street. I don't know what to do with him. And the cop said, well, take him to the zoo. The drunk said, oh, well, good idea. I didn't think of that. The next day, the cop's standing on the corner, and here comes this drunk weaving down the street again. Blows his whistle, pulls the guy over, walks up to the car, and there's a penguin sitting in the back seat. He goes, I thought I told you to take the penguin to the zoo. Drunk said, I did. He liked it so much, today we're going to a baseball game. So if you don't understand why you're doing something, it doesn't do you any good. What we try to do on the Candlestick Forum constantly is teach people what to be looking for, what parameters, what indicators to confirm what are good signals, and when to get in and when to get out. I'll usually come in, we've got 2 chat rooms. One's the options room and the futures room, and the other one's the main room. And usually in the morning, as the market opens, I'll put out texts of the ones to be looking at. Then I come in around noontime for about an hour, and we go through the charts. I'll try to text if I see something during the day. Then I usually come in for another 20, 30 minutes at the end of the day. Would you consider the candle at the top as an evening star? On this one, not really. Yes. If you're in the, once you become a member, we do special trainings. You get to come to the members training on Monday night, which is the same as Thursday night, except more oriented toward the positions we have open. We'll usually try to do a special training during the week. It might be on entry and exit strategies, stop losses, how to set up your scans, how to use the moving averages, all sorts of topics. And then, then during the day, you've got the chat rooms open all day long. There are many stochastic indicators in TOS platform. Which one do you use? The 1233. Is this the last of the signal series? Becky, I think it might be. Okay, let me get through some more here. The bigger the signal, the more compelling that there's been a change of investor sentiment. So if I see a Morningstar signal and it opens positive the next day, what's more compelling to tell you the bullish confirmation is there? When they gap it up the next day. This is why you want to not be afraid of a price move that's already up 3, 5, 10, 15%. Because if it's coming off a signal, it's telling you there has been a reversal. Your Morningstar signal can have 1 or 2 days of indecision. If it has any more than 2 days, now we move it into the cradle pattern signal. So if I see it close right here at this level, and I see the next day the market's opening a little bit positive and Netflix is opening positive, I can be buying immediately because I know that the probabilities are I'm going to be in an uptrend. Where's my stop loss? Wouldn't want to see it close halfway down this candle, the one that told me the bulls had taken control. Morningstar signal opens positive the next day. Here's our expectations. The good strong price move. So there's always a candlestick truisms, and that is the bigger the signal, the higher the probabilities that there's been a change of investor sentiment. So notice what this one did. Doji, best friend gap up, closed well above the halfway point of this candle, closed well above the T. That tells you the bulls are now in control. This one happened today. ENPH. Now, this is today's trading. Look what happened a few days ago. Look where the Morningstar signal occurred. Right smack dab off the 50. What kind of pattern did that tell you? Well, this is what we call the classic. Look at our fry pan bottom followed by the J hook. What's a prerequisite for a J hook? A strong price move. What's the expectation coming out of a fry pan bottom? A strong price move. So they usually work in conjunction. This is today's signal, mule. Look where the Morningstar signal occurred, right smack dab here on the T line. So if this opens positive, what's it indicating? That we probably have a J hook pattern in progress. So the opposite, obviously, of a Morningstar signal is the evening star signal. Bullish candle, day of indecision. Third day closes more than halfway down this candle. Anytime you start seeing that up here, especially when your stochastics are in the oversold area, overbought area, it's time to take profits. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Shooting star, doji, fourth day, bearish candle. Evening star signal. Anytime you start seeing a sell signal, get ready to take profits and or start going the opposite direction. How to utilize the 3T, that's a whole different training, but the 3T becomes more effective the further away you are from the T-line. When you say close, is that the end of the day or just through halfway of the previous candle? If I was long on this one, with a doji in the overbought condition, and it's been in a steady uptrend, where would be the likely spot to tell me the bears are starting to take control? Put a stop just below the low of that doji. If it comes down through there, I can pretty much anticipate what type of signal is happening. Or, in this case, because we're not in the overbought area, when it closed below the T-line, I'm closing it out, because what can I visually identify? An evening star signal, and where did it occur? Right at the same level we had the bearish engulfing signal a few weeks prior to that. So remember, the further away we move from the T-line, the higher the probability we're going to come back and test it. So if I'm up here in the overbought area, doji, shooting star, doji, and it opens lower the next day, I'm closing it out immediately, because what's our simple rule of the doji? It's going to move in the direction of how they open after a doji, which means where's our next likely target? Back down here. Now, I can come out. If it does a J-hook pattern, I can always get back in. Or if I see they're not coming back up above the T-line, I can start going short. Anytime you see that gap up, especially when you're up here in the overbought area, start watching for your sell signal. Evening star signal, I'm closing out the trade, especially if it trades back below this level. Then notice what we have. Kind of a doji sandwich. I'm shorting it here. And how long do I stay short? Somewhere down here until you see a buy signal and a close back up above the T-line. The bigger the signal, the more compelling. So if I'm up here in the overbought condition, my trailing stop is I've got to stop just below the doji low. Because logic says if it comes down through there, where's it heading? It's heading back to the T-line. Evening star signal, I'm taking profits. Evening star signal, I'm taking profits, because where's my first likely target? Back to the T-line. Morning star signal, notice our doji gap up. That tells us when to be buying. And we don't have to do it on, you can use this on Forex. Remember, this is not an analysis of a market. This is an analysis of investor sentiment on anything that has fear and greed in it, which is every trading entity out there. So if you're analyzing the indexes, evening star signal, morning star signal, smack dab off the 200. Shooting star, close below the T-line. Morning star signal. So you've got a fairly clean roadmap of when to be buying and selling, whether you're trading off a trend channel. You can see where the buys and sells. There's your morning star signal bouncing off the 200, right smack dab here on the bottom of this trend channel. Evening star signal, and start shorting. Or if you didn't short here, if it opened lower the next day, what would you be doing? You want to be shorting, because not only would you have a evening star signal, but then you'd have a bearish doji sandwich, which would be your bearish McMuffin, making the next likely target the 50-day moving average. So if you constantly remember that the Japanese rice traders are telling us where most people buy. They buy exuberantly at the top. The further away you move from the T-line, the more you can start looking for a reversal signal. All right, so that's our kicker. What's the difference between a flutter kicker and a morning star? A flutter kicker signal has a down day, and then the doji opens above the previous day's gapped up. Okay, so we're only going to spend 10 more minutes because we kept way over time. But people had some questions on individual stocks based upon either the kicker signal or the morning and evening star signal. So if you've got something pertaining to those type of charts, we'll do those. We don't have time to go through a bunch of them tonight. Now remember, I should put this in as a caveat. Let's see. Check that special. All right, this is CYH. There's your bearish kicker signal. So this would be a very simple trade. If it opened lower tomorrow, telling us the 50 is not acting as resistance or as support, it's going lower. TEUM. That's kind of a trend kicker signal, yes. So you've got a couple things that you can analyze here. You've got that slow curve. The uptrend started with your bullish engulfing. Now you have a trend kicker that broke out through this level. You can still be buying this one. Whoops. Sorry about that. That's just a fine howdy do. Forgot to bring the screen back up. Makes it kind of hard to see what we're talking about. Okay, this is TEUM. No screen, no screen. How about that? Okay, so you have kind of a trend kicker, slow curve, breakout. You can be buying this one. We did CYH, which was a bearish kicker signal, which meant if it opens lower tomorrow, telling us the 50 is not acting as support, it's probably got more downside. Let's see, EVHC. No, not a kicker signal. All that is a doji gap up. You can be buying it. It's not, but it's not a bullish kicker. TJ Maxx. That's your message. The message is they gapped it up above the previous day's open, but look what happened after they gapped it up. They started selling it off. But what was our message? They gapped it up. So what do we look for now? We look for the selling to stop, then you can start buying it. AES, no, that's not a kicker. Now that's more of a doji gap up. If that's what you're referring to. Now, it's still a strong chart, but they lost a lot of momentum today with the dark cloud. So if you stayed long, now your criteria becomes very simple. It has to open positive and trade positive to stay in it. BKNG price line, that's your message also, because it gapped up. Now you wait to see when the profit taking is over. Macy's, no, that's neither. That's a message. I mean, Notice they gapped it up, brought it down, and then today they did a bullish harami. What does that tell us? The selling has stopped. You can be buying this one on positive trading tomorrow. Oh, socks. What's the question? Morningstar? Yeah, kind of a Morningstar signal. So if you're buying this tomorrow, just watch to see what happens once it gets to the T-line. FPRX? No, that's not a kicker. That's just your doji breakout. Still a good chart. It's a fry pan bottom, but not a kicker signal. IBP could, no, it's more of a gap down. So if it opens lower tomorrow, you can be shorting it. Because they tried to bring it back up, but if they open it lower, it tells you the bulls have failed. That you want to be out of that, or that you want to be going short on that trade. TPC, there's a kicker signal. That one you can be buying on positive trading. Just make sure it gets up through the T-line. This is just a gap down. Yeah, there's no kicker on this one anywhere. But you do have a bearish engulfing bearish belt hold, which would tell me you could start shorting this one on weakness. BDLP, nothing as far as other than just a fry pan bottom. Wouldn't FPRX be a flutter kicker signal? No, it's more of a bullish doji sandwich. It has a bullish candle, doji, and then a bullish. Remember, a kicker signal would be a dark candle right here. Yes, and you also want to have your signals, your formations fairly big. That's kind of an evening star signal in BABA. So this makes it very simple also. If this opens lower tomorrow, you can be shorting it. Now you're in wave 3 to the downside. With wave 3 is this magnitude. That makes the 200-day moving average your likely target. Wheat had a good day today. Whoops. You see where it broke out. Now it's trading after hours up here, but it was up like 24 cents, which as you can see is a big, huge day for wheat. So when it broke through kind of this little resistance level, and here, put your J-hook pattern back in place. That's a kicker signal on Chico's. So you can be buying this one on positive trading tomorrow. Where would be the logical place for it not to trade? Back below the open. If it did, that tells you you're still stuck in this trading range. Dominoes. No, that's not a kicker signal either. That's just a down move. Okay, yeah, we're pretty much done. ATSZ, that's not a, oops, ATSG. That's a trend kicker. That's got more upside to it. And I think, yes, RPD did have a good kicker signal, or a, not a kicker, nah, that's a fry pan bottom breakout. CVX, nothing there. Let's see, what was the other one that, shorted hogs over the last couple of days. Because notice where the evening star signal occurred. Right smack dab off the 200. And when it opened lower today, what was it creating? There was your bearish McMuffin. So we're still short until we see a buy signal. Okay, yep, everybody get to bed. Charles, it's recorded, so Jim will show how to pull up the recording. So kicker is not just a gap up, open, but needs to follow a down candle. Yes, a kicker signal, which one? A kicker signal tomorrow in this would be that it opens up here and goes the opposite direction. All right, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.